Welcome, everyone, for the educational Zoom series where we explore different topics to gain financial freedom and achieve financial freedom much faster than if we were on our own. Today, we'll explore cryptocurrency with Tom Tang. Tom is an investor with background in startups, software engineering, and architectural design. He currently runs his own family office, Athena Capital. He holds Bachelor's of Computer Science degree from UIUC and Master's of Architecture from Yale. After spending 5 years designing skyscrapers in America, Asia, and Europe, Tom returned to tech. He ran his own startup in New York City and later joined a YC startup as lead engineer. He also spent a year at Bridgewater learning the ropes of investment management and macro-focused hedge funds. Tom retired from Amazon last year in 2021 as a senior software engineer after a major program launch. He now manages his own investment fund through his family office with a focus on maximizing risk-adjusted returns. The fund's analysis and thinking can be found at athenacapital.fund. Tom, it is such a pleasure to have you on our educational series. Welcome.
Thank you. It's a pleasure to be here.
Thank you. So let's get started. So this topic, cryptocurrency, has always been on my list, and I was so glad to meet you at Angel Investors Network. And to get started, could you please tell us what is cryptocurrency in general for laymen, for people that don't know anything about it?
Sure, yeah. So cryptocurrency defines a class of technologies that use blockchain to create tokens that are not duplicable. So in computer technology, you often get this idea that you have a JPEG and you can copy it any number of times. Well, blockchains prevent that from happening. So they create unique assets that are digital in nature, using blockchain as the fundamental technology to achieve that. And so all cryptocurrencies have that in common. They always have a blockchain, and they always prevent the copying of their assets, so the assets stay unique.
Wow. Okay. And you said blockchain and tokens. Could you please go back and talk about what blockchain is and what tokens are?
Yeah, definitely. And there are definitely a lot of nomenclature in this field. So I'm sure this will be happening a lot, and I'd be happy to discuss all these terms.
Thank you.
Um, and as we go through the topics, I'll sort of bring in some history as well, so that we can understand why these terms exist and why those particular technologies exist. Um, so I'll just go through token first.
Okay.
Token is basically just a way for people to talk about um, assets from different cryptocurrencies. So a token is not really a physical thing. It's not even a single digital thing. It's just a way to talk about digital assets. So, for example, you have um, you have Ethereum, which has the token of ETH. So the token is essentially the underlying asset of value. And then you have the Bitcoin network with Bitcoin as its primary token. And again, Bitcoin is the token that you transact in that network. And then you have others like Ripple, for example. But a token basically is just a way to say I'm talking about the asset of the network and not the network itself.
Got it. Got it. That makes sense. Thank you. So, the Bitcoin blockchain technology and tokens, they were all created, but was there a need? Why and when was it created?
Yeah, so Bitcoin came about as a result of a long cypherpunk movement. So the cypherpunk movement, I believe, started in the 70s or 80s. So it's when some people who had been working in software back in the day got together and realized that as information becomes more available and more free, there will be a need for some tools that protect the rights of the individual. And so they went about trying to think of what are the things we can do technology-wise to make sure that individuals aren't being surveyed on all the time, and individuals have some sense of privacy even as they move about in the digital space. So one of the issues that they started trying to tackle is how do you deal with money in the digital realm? And there have been many papers published since the 80s up to the 2000s that describe different aspects of privacy in terms of monetary privacy online. So some of the technologies that were introduced was the idea of something called a Merkle tree, which is a way to very quickly verify a huge number of transactions in one go. And another is the idea of hashing, which is a one-directional function that produces a unique output that is irreversible. And that led to public and private key cryptography, which is how you can communicate with someone securely using a message on an open channel like the internet without anybody listening in on the conversation. So these are all fundamental technologies that led to the creation of Bitcoin. Now, Bitcoin itself, most people believe was created by a cypherpunk. We don't know for sure because no one knows who he is. He goes by the pseudonym of Satoshi Nakamoto, and he created Bitcoin as a defense against government expanding the money supply and basically devaluing currency. So he saw devaluing currency as one of the ways in which governments can take control away from people. So if people hold their money in the currency and governments devalue the currency, then all of a sudden you have less money. And so that creates certain incentives and makes it very difficult to hold on to wealth and store wealth long term. So in the very first in the very first block of the Bitcoin blockchain, the creator inserted a headline from the Times saying the chancellor announces a new bailout for the banks. This is in, I believe, early 2009 or late 2008. So clearly this is on the mind of the creator, and how bailing out the banks would destroy the wealth of the average individual who does not participate in the financial system in that way.
Right, right. Thank you. And this is so relevant to what's happening today. During the pandemic, I believe 22 of every $100 in existence were printed during the pandemic. And you're right, when we are hoarding cash or trying to build wealth, and the fiat money, the money that we use, the currency that we use right now, which is not backed by anything, and it's just $100 because the government says it's worth $100, and now all of a sudden it's worth a lot less. And that's great. Thank you. I love that. I did not know that I knew crypto is a hedge against inflation and devaluing and expanding the money supply, but thank you for so elegantly putting it. And yeah, go ahead.
Yeah, of course. And I would say that Bitcoin is, if we're talking about hedging against inflation, I think this is a very interesting topic because I think a lot of people do believe that Bitcoin should be a hedge against inflation, but so far that has not proved to be the case because Bitcoin has dropped significantly in price as inflation has gone up.
Right.
And I think people are gravitating towards the idea that maybe Bitcoin expands as money supply expands, and Bitcoin contracts as money supply contracts. And that's a much more accurate narrative right now because the US government is actually contracting the money supply.
Right,
And obviously all asset prices drop when money supply
right,
is contracted.
right,
But Bitcoin is more sensitive to that than other assets.
right,
Likewise, with money supply expansion, Bitcoin will be more sensitive, mostly because if you think about it from a supply and demand point of view, Bitcoin is supply inelastic. The amount of Bitcoin generated per day does not change depending on how many people want it. And
right,
so when there's more money in the system, demand increases and supply stays stagnant, therefore price goes up.
right. So Tom, when you say the Bitcoin it contracts, are you and you just said the supply is inelastic. And when you say when the money supply contracts, Bitcoin contracts, are you talking about the value or the number of Bitcoin?
Yes,
The
I'm
value.
talking about the
The
value of Bitcoin,
value
yes.
falling down with the money supply. Okay, thank
Yes.
you. Thank you. And the creator of Bitcoin wanted privacy in with their financial activities. Does that mean Bitcoin could be used in illegal activities?
Yeah, so a lot of people in early Bitcoin definitely thought so, and they were all proven wrong. The FBI is a lot more clever than they think. Um,
Okay,
so Bitcoin is a pseudonymous system. The
okay,
way that Bitcoin achieves its consensus, which is basically every node agreeing how much money you have, is by having a public ledger. You can't really have complete privacy when you have a public ledger.
got it.
And so everybody knows how many addresses there are and what addresses hold what amounts of money. But who those addresses they belong to, there's nobody knows that unless
Right,
you choose to reveal that somehow. The
right,
moment you reveal it, then you can tie back all of your transactions and say, well, this most likely belongs to this person.
got it.
So there are, I would say, privacy. Bitcoin is one of the worst blockchains for privacy, unfortunately. Um, if you are very careful, maybe you can maintain some sense of privacy, but it is very difficult. Um, so you asked about illicit activities, and it's true that Bitcoin's history is full of illicit activities and people trying to get away with bad things. The US government has basically proven itself to be very capable of fighting fraud in Bitcoin.
Nice.
And there were instances where hackers, locked up someone's computer and then, they had like a ransom and somebody sent funds over. And within like a day or two, the FBI found out who that hacker was
Oh,
and forced them
really?
to return the money. Um, of course, there are still very clever, enterprising, possibly state actors like North Korea that are involved in this that are a little bit harder to find.
Right.
But by and large, I would say illicit activity has mostly moved off of Bitcoin.
Got it. Got it. Thank you. When you say mostly moved off of, I know there are a lot of other kind of cryptocurrencies. Are you saying they just like moved on to like better cryptocurrencies where they could do that?
Uh, Possibly. So obviously, it's very hard to prove what's
Right.
happening in
Right.
other cryptocurrencies,
Right.
but there are cryptocurrencies that focus on privacy a little bit more, like
Okay.
Monero, I think is one of them, where it is actually impossible to trace how many people or who has what.
Wow.
And so they have so if you were to do illicit activity, Bitcoin would not be your blockchain of choice.
Thank you. We're
I'll put it that
definitely
way.
not advocating anybody out there that's listening to this do that, but that was one of the questions I got. So why are there so many cryptocurrencies? The creator of Bitcoin created one, but now there are just
Mm,
so many of them. And
yeah.
why are there so many and how do they all stay relevant and hold their value?
Yeah, this is a question that Bitcoiners ask themselves all the time. So I'll give you a quick history on Ethereum. Back in the day when Bitcoin was first created, Bitcoin has this idea that you could use Bitcoin scripting language to do a number of fancy things.
Okay.
And one of the fancy things that Bitcoin implemented is called multi-signature support. Multi-signature support basically means that you can have You can have a defined number of signers required to execute a transaction, kind of like how you would if you were at an organization or a bank.
Oh, right.
So you could say n out of n, like 2 out of 5 or 3 out of 5, or like 100 out of 1,000 if you wanted to. That would be a very long script, but you could do it. So some people who were working in Bitcoin at the time thought, well, if you could do this with Bitcoin, why not do more? And so Vitalik was one of the people that came out and said, hey, I think you could actually build a Turing complete blockchain system. Turing complete means it can run any kind of program, and we could launch it in Bitcoin or as a new blockchain. And this is around, I think, 2013. And people in Bitcoin were like, okay, well, we have more pressing problems that we need to solve. And introducing this introduces a huge amount of risk. Also, it would be what's known as a hard fork, which means everybody who's currently running Bitcoin needs to agree to this update and basically run a new software. And so they're like, I don't think so. So Vitalik went and built his own coin, which is Ethereum. And so this created a precedent. It's not the first, but it's one of the biggest of basically saying, hey, Bitcoin is too conservative to do what I want. And so I'm going to launch my own coin. Other examples, a lot less interesting, are things like Litecoin. Litecoin essentially says, hey, Bitcoin code is cool. Why don't I copy it and change a few parameters? So instead of 10 minutes per block, maybe it's 1 minute per block. Instead of 21 million, maybe it's 42 million. So because it's open source, you can literally copy the code, paste it, and create your own blockchain.
Oh, goodness. Okay.
So it was almost kind of inevitable that we would have this cornucopia of different blockchains, and they all purport to have some sort of innovation or technology. Whether that's actually true, that's a separate discussion. Um, and from the Bitcoiners' point of view, one of the interesting things with this is any technology that's sufficiently threatening to Bitcoin could be brought back into Bitcoin. We haven't really seen that happen, as the new technologies that are being developed on Bitcoin are for solving Bitcoin use cases. But in theory, that could be true because the code should be more or less interoperable. The question would be, is this a hard fork? Does this need to be something that all network participants need to agree on? And so that really kind of raises the bar on what Bitcoin can and should do.
Got it. Got it. And how is cryptocurrency transactions recorded? How are they recorded and how do I own some?
Yeah, yeah. So, um, so Bitcoin and other cryptocurrencies all use a form of public ledger. Different public ledgers have different privacy systems, but by and large, they are public ledgers where you can see addresses and how much coins they own. And these ledgers are put into blocks that are part of the blockchain.
Okay.
And so in each of the blocks of the blockchain, you have a list of transactions, and the list of transactions basically says this amount of money is going from this address to this address.
Got it.
And so when you add all of these up together, then you know which addresses have how much money.
Got it. Got it. Okay.
In Bitcoin terminology, that final account is called the UTXO. And that UTXO is, I think it stands for unspent transaction outputs. And so that UTXO is basically what you look up to see what money or how many Bitcoins are in each account.
Got it. Got it. Thank you. And with Bitcoin, with its origin, which is it's competing or challenging the status quo. How is its adoption in the institutional realm?
Yeah, so starting from 2011 is probably when Bitcoin was first kind of publicly known.
Okay.
Before that, it was mostly within sort of the realm of cypherpunks and their like newsletters and online groups. So 2011, I think, is when somebody bought a large pizza for something like 20,000 Bitcoin.
Okay.
And
Oh my
so that was the
God.
first that was the first transaction. Um, and after that, people are like, "Oh, this thing has value. You could do stuff with it. I don't just chat about it with my friends."
Great.
And so that's the very first time where somebody decided that Bitcoin had value. Um, so after that, I would say about like 20, like late 2011, 2012 was when we had Silk Road, the illicit drug trading on the dark web. So that's when like Bitcoin was like, hey, this is like a weird illegal thing and it can be used for illegal transactions. Um, and so it went from it's only for nerds to it's only for illegal transactions. Around 2013 was when it started becoming more retail focused. So 2013 was when Coinbase launched, and Coinbase really opened up crypto to the broad market, where people who were more like technologists in general, but maybe not as nerdy, were like, hey, look at this cool thing that I could own. And as they watch the price whipsaw, they're like, whoa, this is exciting. So it became a speculative asset for techies as of 2013. Um, and from 2013 to 2017, I think is when we saw sort of slow adoption by the non-techies. So people, like average people, started hearing about Bitcoin on the news, and obviously it's always like bad. It's like, oh, Bitcoin's dying, Bitcoin crashed, China bans Bitcoin like the 50th time. Um, so it started becoming more of a global phenomenon. There are a lot of people in China that were invested in buying it. A lot of people started thinking about how to mine it. People who weren't involved in Bitcoin before, they started getting interested in the space and started getting interested in Bitcoin mining as an operation. Um, and so we saw more broad adoption. I would say 2017 forward is when we started seeing more kind of institutional adoption. So so like hedge funds started coming up that's doing some crypto trading. We started seeing crypto specific hedge funds. And then we started seeing some banks offer it to retail customers. And we saw a lot more just more sophisticated trading of Bitcoin that was more algo trading, and even some like high frequency trading of Bitcoin. So that's when you started seeing sort of flash crashes. I think at some point Ethereum had a flash crash from, I want to say, 2000 down to $30 and then back to 2000. And some people actually had buy orders around the 50 mark, and they made a lot of money that day. Um, so these are some of the hijinks that you see in the crypto markets. But one of the one of the indications that I have that Bitcoin is being traded institutionally is that Bitcoin price movement has something like a 0.95 correlation with the S&P in the last 5 months. So that suggests to me that whoever is buying and selling are doing both at the same time, one. And two, they don't understand the value proposition of Bitcoin if they're selling and buying at the same time as risky tech stocks.
Right.
and other stocks, other growth stocks. And so I think right now there is an ETF for Bitcoin called offered by Bito. And there's more that are probably coming online. I know that spot ETFs are a little bit trickier. And I believe the regulators who have denied the ETFs had said something along the lines of Bitcoin has no underlying value, and so the spot ETFs were not allowed, but futures have been allowed for a long time. So CME has allowed futures Bitcoin trading, I believe, since 2017 or 2018. And so that's really kind of helped with the institutional adoption as well.
Ah, that was amazing. Thank you. That's
Yeah.
putting it how it went from somebody using 20,000 Bitcoin to order a pizza to how we're talking about exchange trade funds currently. And if Coinbase was not launched at that time when the very first transaction occurred, how was it transacted?
Yeah, so this is how Bitcoin was designed to be transacted, which
Okay.
is everyone holds a wallet, and the wallet can be any form. It can be an app on your smartphone, it can be a program running on your computer, it can even be a piece of paper that you send someone with your address on it, and somebody else with a different wallet basically sends this transaction across the network. And so on your wallet, you would say send to this Bitcoin address, and it would broadcast to all the nodes. And then that transaction would be mined into a block. And then the person on the other end would be able to see it in their wallet.
Got it.
So Bitcoin does not need exchanges in order to transfer. There's no need for brokerages. And so it really removes the counterparty risk from the transactions themselves.
Got it. Got it. Thank you. And um, you talked about flash crashes and can cryptocurrency fail? I mean, just lose its value altogether, and now that there are so many of them?
Yeah. Um, so the short answer is yes, just like anything can lose their value, but the nuanced answer is unlikely. And the shorthand that a lot of people use is basically saying, hey, Bitcoin currently has, I forgot what its current market value is, maybe let's say 500 billion market cap. If you could hack Bitcoin, you could get all that value for yourself. And so it's essentially an ongoing black hat kind of like attack, like incentive to attack, right? And so the longer that the network stays operational with the amount of money that's in it, the more belief there is that Bitcoin will survive. And there could be, I think one of there are definitely risks in Bitcoin. One of which is governmental rejection of Bitcoin. If all governments in the world say we don't let our citizens use Bitcoin, your Bitcoin will still exist to you, but you won't be able to sell it to anyone, at least not legally.
Right.
Um, so that becomes a problem. The probability of that happening across all countries is very low because as countries start to reject it, it actually incentivizes other countries who are opposed to them to adopt it.
Right.
um, so we saw with China banning mining fully last year. This is sort of their we're banning it for real this time. um, Almost all the mining operation that was in China moved to the US. And so US is now the biggest Bitcoin mining ecosystem in the world. Even though it doesn't necessarily have the cheapest electricity in the world at all times, which is generally where Bitcoin miners want to go. But it's one of those interesting things where states ban it, and other states are like, this is okay by me. There are also technology threats. So Bitcoin relies on public key cryptography, which uses a hashing algorithm called SHA-256. SHA-256, as far as we know, cannot be broken, which means it cannot be reverse engineered to go from a private key to a public key. If you could do that, or sorry, the other way around, public key to a private key. If you could do that, you could look at somebody's address and then you could figure out what their private key is and move their coins. So we don't yet know if there's a solution to this. If somebody discovers that SHA-256 can be reverse engineered, we're all in trouble. Not just Bitcoin, but all of encryption, all of like state intelligence, like humanity is in a load of trouble. So not that that makes Bitcoin any better, but this is a systemic risk seen across all technology stacks. And further, there's also the fear that maybe quantum computing, which is coming up, may somehow solve SHA-256. So far, this is unlikely, but we don't know what technology advances will happen. The hope is that if there is a way to use quantum computers to break SHA-256, there's also a way to use quantum computers to make something like SHA-256 stronger. Hopefully it's symmetric. It may not be, but those will be interesting things to keep track of when you think about Bitcoin losing its value or dropping down to zero or
Got
failing
it.
completely.
Got it. Now that you've thoroughly scared us into what all can go wrong, how can I buy some? How can I
Yeah,
purchase cryptocurrency?
yeah, definitely. So the best way to buy cryptocurrency, if you were to ask someone who's a longtime Bitcoiner, is to go to an exchange, trusted exchange like Coinbase, do the full KYC setup, buy the cryptocurrency that of your choice, hopefully Bitcoin, and then go buy a hardware wallet, such as Trezor, and then send it to your hardware wallet. So a hardware wallet is essentially a USB-like device that prevents the leaking of your private keys.
Got
And
it.
it will generate private keys for you that has a sufficient degree of entropy so that it's very hard for other people to crack. And it will sign the transactions on the device where your computer will never see your private keys. It only stays on the USB. And the USB is tamper-proof. So if somebody tries to extract the private key, the whole thing will just not work. And the reason why I always tell people to use a hardware wallet is because throughout the history of Bitcoin, many exchanges have gone defunct, and people who had their funds on the exchange lost their coins forever. So I was 2 weeks away from losing my funds in Mt. Gox in 2013. So I had pulled my funds out. I had initiated a transfer out, and they're like, oh, we're having some issues. It might take a little while. And it took me 2 weeks to get my money out. And then 2 weeks later, they said we're insolvent.
Oh my
And
goodness.
so it is very real and very dangerous. And this is one of the challenges with dealing with cryptocurrency is it just requires a whole nother way of thinking about your assets and your money. And this isn't for everyone because a lot of people don't want that kind of responsibility over managing their assets. So there are other companies that have come up to try to solve this problem. One that I like a lot is called Casa. And remember, I was telling you about multi-signature before.
Right?
Casa will help you set up multi-signature for your account. And what that means is you'll have multiple hardware wallets where if you lose one, you can still retrieve your funds with your other two. Or you can set up even something like inheritance, where you have something like 3 out of 5. And let's say your lawyer has one, and then one of your beneficiaries has one, and then you get to keep one. And then maybe you have 2 more stored in locations that only you know. And so there are companies solving this in very clever ways. And so this space will get a little bit better, but it's going to look different from the custody model that most people are used to with their other assets. If you want to do it properly, which not everyone has to. I think something like 95% of people who buy Bitcoin on an exchange keep it on an exchange. So
Oh
this is
my.
definitely not something that most people do. But if you have a decent amount of money in there, the way you should do it is self-custody, because it is possible. And that's one of the major innovations of this technology.
Got it. Got it. Thank you. And if I really don't want to buy Bitcoin for myself, or I don't know how to, and if I just want exposure, and is there a ETF that I could buy?
Yeah, so I believe Bito, so I've never used this, but Bito is an ETF for Bitcoin. So you can get Bitcoin-based exposure. I believe there's also a company called Grayscale, and Grayscale has Bitcoin exposure. They're called a Bitcoin Trust, and so I think you can buy shares of Grayscale that roughly track Bitcoin as well. And there are probably others. I know in Canada, they do have spot ETFs that are easy to access, but I think in US, again, there's a regulatory hurdle with
Right,
spot ETFs at the moment.
right, right. Thank you. And is it true that we can trade Bitcoin 24/7?
Uh, yes.
Yes. Oh my
Um,
God.
but not the ETFs.
Not the EDMs, just the
Yes,
tokens
just
themselves.
just the just the tokens themselves. So if you go on Coinbase or any of the exchanges, like there's FTX, you get 24/7 trading, and it is it is hectic.
Yes, just
Yeah,
thinking about it is hectic. So,
yes,
well,
I almost wish it didn't.
oh my God. With stocks, I have enough trouble sometimes just thinking about it during the trading hours. I can't believe you never stop. Your mind keeps racing. If you could, I mean, you could be trading right now instead of
Yeah,
having this conversation.
I
So
could be trading while having this conversation.
that's true. Yeah, yeah. So,
Um,
Tom, oh my God, there's
yeah,
such an interesting conversation. Thank you. Where
of
can our
course.
listeners get in touch with you or learn more about you?
Yeah. So you can find me in LinkedIn. Um, so I don't know if you can, let's see. You can find me. My name is a little bit generic, but it's Tom Tang. You can also search for me on athenacapital.fund. I believe I have an email on there. If not, I'll add one so you guys can contact me.
Okay,
But
perfect.
I'm always happy to talk about Bitcoin and crypto. It's such a fascinating ecosystem.
No, thank you so much. It was very enlightening, and I'm pretty sure a lot of listeners got a lot of value out of this. So thanks, Tom.
Fantastic. Of course, anytime.